Applied Digital Corp is currently trading at $29.29, which is a gain of $1.35 or 4.83% on the day. Now, seeing a nearly 5% jump in a tech-related stock might lead you to believe this is just another company riding the coattails of a broad market rally, perhaps catching some residual momentum from giants like Nvidia stock. The general expectation is that Applied Digital is a volatile, high-beta play tied to the whims of the crypto markets and speculative AI fervor. That's the story many people who use platforms like the Robinhood app or SoFi Invest have come to accept. However, the reality of what's happening beneath the surface is far more strategic and points to a fundamental transformation that the daily price chart doesn't fully capture. The real story here isn't just about capturing upside from a tech boom, it's about a calculated pivot to becoming the essential utility provider for the next phase of computing, a much more durable and defensible position than the market gives it credit for. Most investors see Applied Digital, formerly Applied Blockchain, and immediately categorize it. They see its history in crypto asset mining infrastructure and lump it in with a group of companies whose fates are inextricably linked to the price of Bitcoin. The expectation is for wild price swings, high sensitivity to sector sentiment, and a business model that feels more like a gamble than a long-term investment. This perspective isn't entirely wrong, but it is dangerously incomplete. The reality is that the company has been aggressively leveraging its expertise in building high-density, power-efficient data centers to service a much larger and more stable client base, the high-performance computing and artificial intelligence sectors. Today's 4.83% move isn't just a reaction. It reflects a growing, albeit slow, recognition that Applied Digital is no longer just a crypto hosting company. It is becoming a specialized infrastructure provider, a landlord for the AI revolution, and that distinction changes the entire risk-reward calculation for anyone considering an investment. This is the kind of nuance that sophisticated tools on platforms from Interactive Brokers or Fidelity Investments are designed to help investors uncover, looking past the headline number to the underlying business shift. Let's dissect today's market action more closely. A 4.83% increase doesn't happen in a vacuum. Trading volume today is sitting significantly above its daily average, suggesting this isn't just passive buying. There is active participation and conviction behind the move. This surge is likely linked to renewed positive sentiment across the semiconductor and AI infrastructure space. When a market leader like Tesla stock discusses its massive computing needs for autonomous driving, it creates a halo effect for the entire ecosystem of companies that provide the picks and shovels, like Applied Digital. The market is connecting the dots. Enormous demand for computational power requires enormous, specialized data centers. However, the deeper truth is that Applied Digital's recent performance is also being influenced by its own operational execution. The company's progress on its 100-megawatt facility in Ellendale, North Dakota, and its other sites is a critical factor. Unlike a software company, Applied Digital's growth is tangible. It's measured in concrete, steel, and megawatts. Each construction milestone they hit de-risks the business model and provides concrete proof of their ability to deliver, which is something institutional capital, often managed through Fidelity Brokerage or Schwab Intelligent Portfolios, pays very close attention to. The stock has been in a period of consolidation for the past several weeks, building a base after its last earnings report. Today's move appears to be a technical breakout above a key resistance level. For chart watchers and those using a Fidelity trading platform, this is a bullish signal. But again, the technicals are only a reflection of the underlying fundamentals. The last earnings call was a pivotal moment. The company's management team placed heavy emphasis on their growing pipeline of HPC clients, subtly but surely distancing themselves from the crypto hosting narrative. They spoke about multi-year contracts with non-crypto customers, which offer far greater revenue visibility and stability. This is a critical distinction. A 3-year contract with an AI research firm is fundamentally different from a short-term agreement with a Bitcoin miner. The market is slowly digesting this transition. While retail traders on Robinhood stock trading might be chasing the momentum, larger investment funds are analyzing the changing revenue mix and projecting a future where earnings are less volatile and more predictable, justifying a higher valuation multiple. The challenge for many engaging in self-investing is to see this shift before it becomes the consensus view. What does Applied Digital actually do? At its core, the company designs, builds, and operates next-generation data centers. These aren't your typical office server rooms. These are massive, purpose-built facilities engineered for one thing: extreme power density. Applications like large language model training and complex simulations generate an immense amount of heat and require a staggering amount of electricity. Applied Digital specializes in creating environments that can handle these intense loads efficiently. They often locate their facilities in regions with access to low-cost and increasingly renewable energy sources, giving them a significant competitive advantage. Their business model is twofold. They offer colocation services, where they rent out space and power to clients who bring in their own hardware, and they are expanding into providing cloud services, offering direct access to high-performance computing capacity. This hybrid approach allows them to serve a wide range of customers, from established tech companies to emerging AI startups. This is a capital-intensive business, requiring substantial upfront investment in infrastructure. This is why financing and cost of capital are so critical to their success, a factor that anyone using an online investment platform should monitor closely. Looking back, the company's history as Applied Blockchain provided it with a unique training ground. Building facilities for crypto miners taught them how to manage extreme power loads and optimize for operational efficiency under very demanding conditions. They cut their teeth in one of the toughest environments and are now applying those lessons to the broader HPC market. This is a part of the story that the market often overlooks. It wasn't just a name change, it was an evolution built on a foundation of specialized expertise. Past performance shows a history of volatility which is to be expected for a company in a nascent stage of a rapidly growing industry. However, the trajectory of its revenue, and more importantly, its customer diversification, points to a maturing business model. For anyone building a portfolio through online investing sites, understanding this evolution from a speculative crypto play to a core infrastructure provider is essential. Based on their pivot to AI infrastructure, comment below if you think Applied Digital can successfully compete with giants like Digital Realty and Equinox. Looking ahead, the future outlook for Applied Digital is a classic case of high risk, high reward, hinging on execution. The primary catalyst for the stock is the successful and timely build-out of its new data center capacity and its ability to secure long-term contracts with high-quality tenants. An announcement of a major hyperscaler or a sovereign AI entity as an anchor tenant for one of its new facilities would be a transformative event, instantly validating its business model and likely causing a significant re-rating of the stock. Another potential upside is the expansion of their service offerings, moving further up the value chain, from simple colocation to providing more integrated cloud and AI platform services could dramatically improve margins. Investment help resources often highlight the importance of margin expansion as a driver of long-term stock performance. This is a key metric to watch in their upcoming financial reports. However, the risks are as significant. The most prominent risk is competition. The data center space is crowded with massive, well-capitalized players. Applied Digital is competing against titans, and its success depends on its ability to offer a more specialized or cost-effective solution. Construction risk is another major factor. Delays, cost overruns, or issues with securing power agreements could severely impact their growth timeline and financials. This is a real-world business, not just code. Delays in pouring concrete can have a direct impact on the stock price. Furthermore, the company is highly dependent on the capital markets to fund its expansion. A shift in interest rates or a tightening of financial conditions could make it more difficult and expensive to raise the necessary funds for growth. Investors using a platform like Interactive Brokers' account management tools would be wise to track the company's debt levels and cash burn rate. Finally, there's the risk of customer concentration. While they are diversifying, losing a single major customer could still have an outsized